India Inc. has delivered its strongest revenue growth in nearly 4 years. But there is a catch. Companies sold more, profits also grew, yet higher energy and raw material costs weighed on margins. So what drove this strong quarter, and where is the pressure building up? Across 3,458 listed companies in the business standard sample, net sales rose 18.4% year-on-year to 47.27 trillion rupees in Q1 FY27. That was the fastest revenue growth in 15 quarters. For comparison, sales grew just 6% in Q1 FY26 and 11.8% in Q4 FY26. Profits also moved higher. Adjusted net profit grew 16% year-on-year to 4.58 trillion rupees versus 8.9% a year earlier. But sequentially, profit fell 4.4% from 4.79 trillion rupees in Q4 FY26. So, while the annual picture looks strong, momentum weakened slightly quarter-on-quarter. But strong sales did not translate into equally strong margins. For non-BFSI companies, spending on raw materials, power, and fuel jumped 29.5%, outpacing their 21.2% sales growth. It was the fastest rise in these costs in 15 quarters. As a result, operating margins fell to 16.9% from 18.9% a year earlier, the lowest in 13 quarters. Net profit margins also slipped to 7.4% from 7.9%. Three sectors did most of the heavy lifting: banks, finance companies, and mining and metals. Together, they accounted for 66% of the overall profit growth, with combined profits rising 26.6% to 1.99 trillion rupees. Mining and metals led with 45% profit growth, followed by finance companies at 28% and banks at 20.3%. Together, their sales rose 12.3% to around 12.1 trillion rupees. At the company level, Hindalco was the biggest contributor to earnings growth. Its adjusted net profit jumped 116.7% to 8,677 crore rupees, accounting for 7.4% of the overall increase in corporate earnings. It was followed by PNB with profit up 213.6%, LIC at 24%, Bharti Airtel at 41.6%, and JSW Steel at 113%. Together, these five companies posted adjusted net profit of 40,590 crore rupees, contributing roughly a quarter of the overall increase in corporate earnings. But some major companies reported lower earnings. BPCL, Indian Oil, Interglobe Aviation, Tata Motors Passenger Vehicles, and ITC were among the biggest drags on earnings. So what should we take away from India Inc.'s Q1 numbers? Revenue growth hit a 15-quarter high, while profits grew 16%. But underneath that strength is a warning sign. Companies are facing a sharper rise in input costs, and that is squeezing margins. So, as FY27 unfolds, the crucial question is, can companies sustain growth without giving up their margins? Follow Business Standard for more stories.